This is one of the questions I'm often asked. If I had to choose only one company and invest in that company and hold it forever, which one would I choose? Of course, in practice, this is not something that I would recommend. You need to diversify yourself across different securities. But let's just assume I was kidnapped by an alien civilization and now they want me to build their portfolio, but according to their religion, I can only choose one company. So the future of Earth depends on this choice. Which company am I going to choose? I will answer this question after you smash the like button for the algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro where I manage assets for over 115 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. I know that some of you are very impatient to hear my answer. The answer is in front of you, but I'm not going to give it to you directly right now because I believe I need to talk about the process of choosing that company. It's not just this hypothetical scenario. Even if you are planning to retire after 50 years and you want to have a portfolio which can work over all these years, you don't want to do a lot of job in choosing companies every year or every quarter. You want to build a portfolio for the long term. So it is important to go through the same process in choosing companies. Of course, you won't choose only one, but you will choose several companies. So the number one thing you want a company to have if you're going to invest in it for the long term is sustainability. You want the company to be in business after 50 years. And the first company that you can think about, of course, would be food companies because people would be eating after 50 years, even after 100 years, 1000 years. I'm pretty sure people will still be eating if we are still around. So looking at the food companies might be a good idea. Coca-Cola, PepsiCo, Nestle, all these food companies. But we need to be careful since consumer habits are changing. It's not because people are eating some products today that in the future they are going to eat the same products. We can already see it happening with Kraft Heinz. People are no longer wanting to buy these products. They want to buy products which are maybe more organic. So even Nestle, their milk products, maybe this is not something that is going to be sold in the future if people decide to drink less milk. But if we choose a company which is quite diversified, I don't think we will have a problem. But the problem is that if we choose a diversified company, then the growth will be limited. Because when a company has only a few products, it can always focus on these products and maximize growth. But when the company diversified itself, then it becomes hard to outperform the market. So we will need not only a company which is sustainable in the long term, but also a company which can grow. And by growing, it means new technologies. So let's look at the technology companies. The two main ones I can think about is Microsoft and Apple because they are well diversified. You may tell me about Google. Google is has the monopoly on the internet. It's true, but it is not diversified. So maybe it is not such a good idea. But if you're thinking about diversification, then Microsoft and Apple are the best tech companies. But the problem with these two are that right now, both of them are expensive. If you had asked me this question, maybe in 2016, even 2018, I would have told you Apple. This is the one company I would have invested in. But today you look at these companies, Apple and Microsoft, both of them are expensive. So we cannot invest in them. Once Steve Jobs told to Bernard Arnault that he doesn't know if people are going to use iPhones in 50 years, but he's sure that people are going to drink Moet Chardon champagne. So maybe let's look at LVMH because I believe that in the future people are still going to use their products, their leather goods, their jewelry, their watches, and drink champagne and wines. And even if consumer habits changes, I'm pretty sure people are still going to drink champagne and wines after 50 years. This is not something that will change. But the problem with LVMH is that it is already a conglomerate. Yes, it is diversified. Yes, it is big, but it will get harder and harder for it to continue to grow. And this is the same problem with Berkshire Hathaway. Because Berkshire Hathaway also could have been on this list. But why it is not on it? It's because it will get harder and harder to grow in the future. With 700 billion US dollars in assets, it is getting harder for Warren Buffett to make good investments, and he has over 120 billion US dollars in cash. Even if in the short term Berkshire Hathaway can outperform the market, in the long term, we won't be getting the 19% returns which we used to get in the past. It's going to outperform the market maybe, but only by 1 or 2%. That's all. But if these aliens, they want bigger than that, bigger returns than that, we cannot invest in Berkshire Hathaway or LVMH. So let's summarize what we need. We need a company which will still be here in 50 years, sustainable company. Secondly, the company should be diversified and also not diversified enough so that it doesn't grow. So we are looking for growth. And these aliens are value investors, so at the same time, it should be a value stock, it should be cheap. We have talked about a lot of companies today, Coca-Cola, Johnson & Johnson, about Berkshire Hathaway, LVMH, Apple, Microsoft. All these companies, today, they need financing. And in 50 years, they will still need financing. And like I told you, the answer to our question is in front of you. The company that will still be in operation in 50 years, and I think I would invest in, is JP Morgan Chase. Banking is a business that has been around for thousands of years, and it will still be around in 50 years, even in 1,000 years. So even if it is changing today because we are going more into digital form of money, banking will still be here because of the big regulations. I don't think that in 50 years we'll be using Bitcoin instead of the US dollar. It's not going to happen. So betting on a bank is a good idea. But which bank? Of course, I'm choosing JP Morgan Chase. And the reason is because JP Morgan Chase, compared to its peers, has much better metrics. And right now, the stock is cheap. Compared to its peers, there's always a premium on the stock of JP Morgan Chase. You will see the book value, the price to book ratio of JP Morgan Chase is usually higher compared to the competitors. But right now, it is cheap. It is cheap. The premium is here because this is the best of all the banks. So if you are buying the best company, of course, you need to pay a premium on it. But book value is not everything. Of course, when you are looking at banks, I think the most important metric to look at is book value. But it is not everything. There are other metrics that we should look at. For example, let's talk about Citigroup. It has growing book value, but why it is not such a good investment? It's because the returns on those assets, on those equity, is not that big. So you need to have an increasing book value, of course, but at the same time, you need to be making money on this book value, on these assets. And that's why it is important to look at ROA, returns on assets, and ROE, returns on equity. There are other metrics, returns on common equity, returns on tangible equity. Of course, you need to look at all of that. But for simplicity, let's just talk about ROA, ROE. And when we look at JP Morgan Chase, they have been outperforming the competition. And this is not something to do in this environment when we have zero interest rates. We can already see banks in Japan, in Europe, how they are underperforming JP Morgan Chase or any other American bank. It's because of zero rates and negative rates. But JP Morgan Chase have been able to take advantage of the low interest rate environment. And that's by expanding its credit card business. So when you are selling credit cards to people and the rate on these credit cards is low, then it is easier to sell them to people because people generally, they don't want to pay to use a credit card with 30% interest rate. Of course, if you lower the rate, it becomes easier for them to use. So JP Morgan Chase is now the largest American credit card issuer. The credit card business is part of the retail banking or commercial banking business under the Chase brand. We'll talk about branding in a few minutes. So this Chase brand is expanding throughout the United States. They are opening more and more branches, even states where they did not have branches previously. Normally, Wells Fargo was the bank with the most branches in the United States. But now we can see Bank of America and JP Morgan Chase growing. They want to compete with Wells Fargo. Even if most people use their phone for banking, they still want to have a bank in the community. This is what Jamie Dimon says, but I choose to believe him. But the difference with JP Morgan Chase and Wells Fargo and even Bank of America is that JP Morgan Chase can also expand internationally and mainly through the JP Morgan brand. So why branding is so important here? It's because, let's just say for simplicity, the JP Morgan brand is for the rich and super rich. The Chase brand is for the poor and middle class. This is how it is. The JP Morgan brand, this is where there's asset management, assets and wealth management. There is custodian banking. There is private banking. There is also investment banking because JP Morgan Chase is the world's largest investment bank. And Jamie Dimon, in an interview in China, he said that in 50 years, you see, he's talking about 15 years. So I think it is important to talk about the future. In 50 years, there is going to be a JP Morgan building in Shanghai as high as the one in New York. So you see, the bank wants to expand their investment banking business. Today, they are already the leader ahead of Goldman Sachs and Morgan Stanley, the three main players. In 2008, they were not even on the top 4. So you see the progress that this company has made in recent years. And it's thanks to one man, Jamie Dimon, the CEO of JP Morgan Chase. I'm a great fan of Jamie Dimon. I'm sure you know about that. He has been named the best CEO in America for multiple years by Fortune 500 companies. And it's not random people who name him the best CEO in America. It's the Fortune 500 companies CEO themselves. So let's say Warren Buffett gets a call from Fortune magazine. They ask him who in his opinion is the best CEO, and he named JP Dimon. There are so many people, so many CEOs who named Jamie Dimon. That's how he became the #1 CEO in America. And Warren Buffett tells us that we need to read the letters of Jamie Dimon every year. The letters are better than his letters that I think are more famous. And the richest man in the world, Jeff Bezos, said that if he was a shareholder of JP Morgan Chase, he would have bought donuts every morning to Jamie Dimon. And Jamie Dimon's great reputation is not just in business, it's also in politics. Because he was asked by both President Obama and President Trump to be the Secretary of the Treasury, but he refused both of them. So if you can refuse 2 presidents, I think you must be a great CEO. You want to be CEO of your bank instead of being the Secretary of the Treasury. You are a few steps away from the presidency. And even Biden, I believe, is considering naming him. And I don't think he will accept, because he already said that he wants to be CEO for at least 5 more years. He has been saying this for years. But it is not just about Jamie Dimon. It is more than just him. And that's what makes a great leader, when you have a great team. Even when he leaves, because we are thinking about the next 50 years, I don't think the company will have such a problem. If Jamie Dimon retires, most probably he will be replaced by Marianne Lake. Marianne Lake is the CEO of the consumer banking business. So all this progress that I told you about the credit card business, about expansion of the branches, that's all on her. That's her work. Of course, Jamie Dimon has a say in it. But the way the company is structured today, there is no such thing as vice president of consumer lending or vice president of investment banking. These people are CEOs, so they have some autonomy into their work, and this is something I like. And even in wealth management, there is Mary Erdos. You should read about these people. And when Jamie Dimon had his heart attack in March, he was replaced by Daniel Pinto, and we did not see the company crash or anything. So this company is not just one man. Of course, he's the face of the company, but it is more than that. And that's why I'm bullish on this company for the long term. If you want to learn more about Jamie Dimon, here's the book Last Man Standing by Duff McDonald. I recommend it. And also there is one book about the bank itself, about JP Morgan Chase, and also the founder of the bank, JP Morgan, and also Morgan Stanley. It's called The House of Morgan by Ron Chernow. This is another book I will recommend. What are the risks of investing in JP Morgan Chase? Any investment has risk. Here the risk is mainly with 0 or negative interest rates. If the federal fund rate goes negative, things will be bad for any American bank. But I don't think this will happen. And over the long term, it is most likely that we are going to have higher interest rates, because it is unsustainable to have 0 interest rates forever. So maybe for the next decade, 20 years, we'll have 0, I don't know. But eventually, if we have inflation, the Fed will be forced to raise interest rates. This is what will happen. It will happen, and it will be better for the business of the bank. Another risk with this bank is, like with any bank, regulations. The banks are the most regulated industry in America, and maybe in the world. After the Dodd-Frank Act, the banks are highly regulated after the 2008 financial crisis. But in the past, it was even worse. There was the Glass-Steagall Act. So maybe in the future, there is going to be more regulations. But I don't think it will be that bad. Tech companies should be more scared about regulations right now, because this is where the focus of politicians are. The banks, not so much. And I believe that over the long term, the banks will be deregulated, because if really we have higher inflation and the Fed cannot print money, they will be forced to deregulate the banks, because the banks can always provide more money. Of course, I don't think this is happening anytime soon, but it can happen. And I believe it will happen in the long term. If we are thinking about the next 50 years, there will be some time it will happen. Maybe around 2039 when interest rates will be about 8%. To conclude, let's just say that this is just a video about an analysis really of JP Morgan Chase and what to look for in a great company for the long term. But this is not an advice to just invest in this one company. I have only 4% of my portfolio in JP Morgan Chase. I always take the opportunity to buy more of this company. So when my portfolio is growing and I see that I have only 3% of my portfolio now in JP Morgan Chase, whenever I see the opportunity that the stock is cheap, I'm going to invest more. I invested in March when the market crashed this year. I invested in 2018 during the correction, and I have been investing since 2016. I think this is the only company which I invested in every year since I've been investing. So I will keep investing in this company. Right now, my portfolio is about $15,000. If it grows to 50,000, of course, I will keep growing that portion of my portfolio in JP Morgan Chase. I always want to have 4 to 5% of my portfolio in that company. It also pays a good dividend. So if you like dividends, this is a good company. Let me know in the comments what you think about JP Morgan Chase. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos here if you have missed them. Have a nice day and goodbye.